When purchasing a newly constructed home, you'll likely be faced with two main options when it comes to financing: using the builder's preferred lender or securing the loan through a bank or independent mortgage lender. Both options come with distinct advantages and potential downsides. Understanding these differences will be a key to making the best decision for your financial future. At 14 Days to Close, we guide homeowners through the complexities of home financing. And today, we're going to walk you through the lending differences between builder and bank. When buying a newly built home, builders often suggest and even incentivize using their in-house or preferred lender. Sometimes it's like they put you in a headlock and you have to. These lenders are typically partnered with the builder, which helps streamline the home buying process. Choosing the builder's lender can offer some surprising perks. For starters, builders often roll out incentives for buyers financing through the preferred lender. You could score discounts on closing costs, meaning money that stays in your pocket right from the start. Another advantage, home upgrades. Sometimes choosing the builder's lender can mean additional upgrades to your new home. Things like upgraded flooring, extra appliances, which could make the new place even better than you imagined. Another perk you can see is they potentially can offer money for an interest rate buydown. Builder's lenders offer rates that make your monthly payment more affordable, giving you some breathing room in your budget. And there's also a matter of convenience. Builders lenders are typically closely aligned with a construction team. That means smoother communication, fewer delays, and generally more seamless process. No more running back and forth trying to clarify timelines and loan details. Everything is coordinated to help you get the home as quickly and stress-free as possible. And if you've been through this process, it is hard for builders to deal with contractors of all sorts and make sure the lending is okay. So it's tough for them to stay on their timelines. Oftentimes, your close date gets pushed out months, if not a year later, leaving you in limbo. But as with anything, there are some things to consider before fully committing to a builder's lender. First, builder-affiliated lenders often offer more limited selection of loan options. You might not have access to a variety of loan programs that you find at an independent bank or a mortgage broker. That could mean you're missing out on a loan that better suits you for your financial needs. Next, while the incentives might look great on paper, it's important to closely compare the rates and terms. Even with those tempting discounts, the interest rate or terms of the loan from a builder's lender may not always be the most competitive. Banks and independent lenders are constantly trying to win your business, which sometimes results in better rates or terms. Finally, this is a big one. Beware of the pressure you may feel by having to use the builder's lender. You may be incentivized to go that route, but remember, the choice is yours. It's essentially to shop around and consider all your financing options before making a final decision. And if they're offering the incentives, I would ask them, if you use your preferred lender, if you are going to give me $15,000 to use your lender, give me $15,000 to use my lender. Here's a big one. Or lower the price. So if you were going to give me $15,000 to use this lender, but you won't give me $15,000 to use my preferred lender, then lower the price $15,000. Watch what they say that. So how do you choose between builder lender and a bank? Here are a few tips to guide you to making the best decision for your situation. First, always compare loan offers. Get a couple different quotes. Talk to the builder's lender, maybe to another mortgage broker. Break it down. Look at interest rate, closing costs, and the term of the loan. See which one is better. Next, evaluate the builder's incentives. Sometimes the incentives offered by the builder's lender are hard to pass up, but make sure they are truly outweigh the potential savings from a better interest rate or loan terms from an independent mortgage broker or a bank. Lastly, check reviews. Please do this. It's important to research both the builder's lender and independent lenders. Look for testimonials, reviews, previous clients to gauge your reliability in customer service. A great rate won't mean much if you can't close on the home. When you do have quotes, you want to make sure that one quote isn't $17,000 off the other quote, or one interest rate isn't saying 8 and the other interest rate is saying 3. Lender, bank, independent mortgage lender, broker, nobody's off. They're all going to the same source and getting the money and giving it to you. So there should not be a big disparity in different quotes. And if you do see it and someone's a lot lower, beware of the bait and switch. I would run. That's why reviews and testimonials, always pick that, because at the end of the day, if you don't close, you don't get the home. At 14 Days to Close, we're here to help you navigate the choices and ensure you're making the best decision for your financial future. Remember, the right lender can make all the difference. Who's going to answer the phone at 9 o'clock at night? I'm terrified. I don't know what's happening. The inspection, the appraisal. Who's going to answer the phone on Sunday? Who's going to text you back? Who's going to email you back? Who's been there before and knows how to fix the issue? You don't want to panic at this point. You want to enjoy the process. Thanks for watching today's video. Please like, comment, and subscribe if you want more mortgage tips. See you on the next one.